as safe havens wobble and crypto sells off and capital becomes more selective, where should investors really be placing bets in Africa right now? We'll answer that question soon. Good morning and welcome to another sharp, fast-moving edition of Business Week. This week, Washington throws Africa a lifeline, but not necessarily certainty, as the US extends AGOA, that's the Africa Growth and Opportunity Act, just long enough to keep some of our factories here alive while pushing harder for reciprocity in return on mostly agricultural products. In Nigeria, gas takes center stage as NNPC rolls out an ambitious gas master plan and locks in supply deals with Dangote, even as investors domestically here in Nigeria aggressively pile into treasury bills, testing the CBN's appetite for hot money. I'll be discussing that later as well. Across global markets, precious metals lose their shine as gold and silver slide. Tech stocks are also rattled by a fresh AI-driven sell-off, and the US launches a $12 billion minerals stockpile to loosen China's grip on critical supply chains. On the continent as well, Ethiopia's reform push puts it back on a double-digit growth path, while Afreximbank steps in with an $11 billion financing package to steady South Africa's economy. Nigeria courts Chinese refinery investment, and Accra sees inflation cool for the 13th straight month. Lots going on the African continent. Later, we ask whether Africa can defend open trade in a world that's closing its markets and how the continent is going to rebalance trade ownership. Well, if you missed any of the big business stories of the week, don't worry, I've got you covered. I'm Rolake Akinkubi-Filani. Stay tuned. It was a broad week across energy markets where we start. Commodities, natural gas was mostly under pressure this week. So let's see what's happening here. Oil prices pulled back after the previous week's rally. Brent was down 3.23%. WTI was falling by about 2.25. Traders there taking profit, reassessed near-term demand expectations. But natural gas recorded the sharpest move, sliding significantly there by over 15%. Milder weather forecasts and comfortable inventory levels across most markets. Gasoline was the outlier, edged up by over 1%. Steady transportation demand, softer crude prices also contributed. Let's take a look at domestic capital markets here in Nigeria. I think the NGX delivered quite a strong risk-on week. Higher prices and a clear surge in participation. The all-share index climbed 3.84%. Market cap also rose in tandem. Trading activity accelerated sharply. You're seeing there the number of deals jumping by nearly 23%, volumes rising by almost 40%, and value an impressive 188%. So a broad-based rally, renewed investor confidence, early starting 2026, more decisive positioning, particularly large cap and mostly liquid names. African markets, it was mixed across Africa. There was a bit of divergence. We saw their local fundamentals varying pretty much across board. Kenya stood out with the NSE Nairobi gaining almost 4%, while Ghana's Accra exchange added 1.58%. Strength, particularly in financial stocks on the Accra exchange. The Johannesburg exchange was flat week on week. I think mostly caution around global risk, repricing of risk. Morocco slipped by almost 2% to go down 1.93. And overall, African markets, I think, were still relatively resilient, but differing factors there. Let's go to Wall Street. Now, Wall Street, really, the big news here is what happened. I'll just scoot over there so you can take a closer look there. The NASDAQ Composite Index was down by 3.3%. We saw what happened with the broad-based sell-off, particularly in AI stocks. What's happening there? And we also see S&P was down, but Dow Jones Industrial Index held up relatively strong, ending the week up by 2.07%. I'll be talking about that a bit later in the show. Let's go now and take a look at my top picks from around the world. I'd like to start, of course, with the big news here. The AGOA, the Africa Growth and Opportunity Act, was extended by the US administration. This is big news. because it had originally expired in 2015, but it was extended last year by a few months, and then now we're seeing an extension for 10 months. What does this mean? It means 32 countries in sub-Saharan Africa will continue to have preferential access to the US market. The annual trade under AGOA is about 10.4 billion last year, still much lower than it was, say, in 2022, when trade under AGOA was about almost $15 billion worth of goods there. But there was a last-minute deal, and the US Senate did support it. The Republicans supporting a temporary extension. The House Dems are supporting a permanent renewal. And the whole basis and principle here is that AGOA is meant to ensure reciprocity for US goods coming into the African market, and the US authorities do expect an easing of tariffs on US goods as well into the African markets. And interestingly, the real ideological divide here between the Republicans and Democrats is that the Republicans actually believe that the US should prioritize bilateral negotiations between the US and individual African countries rather than this sort of collective AGOA umbrella. So come December 31st, 2026, what will happen to the AGOA pact, which has been on for many, many years? It's a new world order in trade, and we'll be talking about that a bit later in the show, but still temporary reprieve for many African exporters, particularly those exporting agricultural goods. And South Africa is the biggest country playing here in Africa under AGOA. Let's look at my next top pick here. What do I have? Dangote Refinery is in view here, but the big news here is really that NNPC has launched its gas master plan. Some people in the local market will say NNPC has relaunched its gas master plan. We've been talking about the decade of gas, but the big news here is that NNPC plans to boost gas supplies domestically in the Nigerian market to about 10 billion cubic feet a day from the current, I think, 4.2 billion cubic feet. And in order to achieve that, it's going to need to attract investment of around $12 billion. That's not a small order, if you like. And on the back of that, Dangote has actually also entered into the Dangote Petroleum Refinery has also entered into a gas supply agreement specifically under this plan. I think the main news here is that Dangote will sign a long-term supply deal for 300 million standard cubic feet a day of gas as fuel for the refinery. So gas as fuel for the refinery and the petrochemical complex. This is good news. The other thing, and this is important for the environment, is that this gas master plan seeks to reduce gas flaring in Nigeria by 80%. We're seeing some reduction in recent years, but not nearly enough to meet those targets around decarbonization. But we will be watching this NNPC gas master plan, and it also includes a gas to power component that will aim for 4,000 megawatts of new gas-fired generation by 2028. An expansion beyond Nigeria LNG were also included in this, plans to sort of rekindle Brass LNG and Olokala LNG, also known as OK LNG, in the southwest of Nigeria. So we're seeing quite a lot of concentration in the south, in the southwest. A big question that many are asking, what about encouraging other gas hubs in the southeast of the country, for instance? But this is a critical part of Nigeria's power sector. So we're glad to see this gas master plan come out. Now, the key is going to be implementation and pricing. I'm not sure all stakeholders are fully satisfied with the pricing structure under this master plan, but I guess a lot of that will be down to actual implementation and negotiations. Let's look at what else is interesting globally. Ethiopia, back in the news for good reason, and this time with the finance minister of the country and the government saying we're geared now for double-digit growth in 2026. 10.2% is what Ethiopia's finance minister is saying, and we heard him speak very eloquently in Davos about exports, about agriculture, about creating jobs. And one of the big strategies the Ethiopian government has been pursuing for the economy is industrial hubs, industrial complexes, which the country has relied on, industrial parks in places like Hawassa, Bole, Lemi. They are currently operating at 78% capacity. up from 45% capacity. And this is a huge driver of growth in the economy. It's also helped to boost exports. Exports are up. The IMF is projecting about 10% pace of growth, which essentially aligns with the finance minister's projection of about 10.2%. We've also seen the country trying to liberalize across key sectors, particularly financial services. A positive development there with the reform momentum in Ethiopia. Let's scoot over now to the big news here is that Afreximbank is stepping out to offer the South Africans an $11 billion lifeline. I'm hard pressed to call this a bailout. It's been described as a lifeline. And part of this is really to help the country deal with some of the fiscal issues it's facing. We're seeing a debt to GDP ratio of around 72%, a budget deficit of about 4.5%. A portion of that will go into infrastructure spending, 3.5 billion, 2.5 billion as well, intra-African investment. And this support really hinges on closer regional integration between South Africa and its other peers in the region. An interesting dynamic here is that Chinese influence is also very evident here. There's a $2 billion capital boost from Beijing, which is also helping to strengthen Afreximbank's lending capacity. This is interesting because it comes just a couple of weeks or a week after Fitch downgraded Afreximbank to junk status, but notwithstanding, the bank still firmly supporting the growth and development aspirations of Africa's major economy, which is something we like to see. Let's look at what else is happening around the world. Now, this is interesting for all you cryptocurrency lovers, but not a good season for crypto. The sell-off continues, and it continues majorly, breaking a floor. It broke that 60 barrier, 61 barrier, and we saw a 15% downturn in the crypto market, selling off to close, I think, a couple of days ago and landed about $60,847. What is really happening here? Many of the leverage positions in Bitcoins are also actually challenged. We saw major liquidations on some of the major exchanges like Binance, like Coinbase, like Bybit, even some of the crypto ETFs, which have been very popular with institutional crypto investors, were also really challenged. We saw about $1.2 billion in net outflows just during the course of the week, just in the space of 2 or 3 days. And I think this is the first sustained redemption under those ETF structures since they were launched just a couple of years ago, just under 2 years ago. What does this mean for the long-term prospects of the cryptocurrency? This is a major slide. And I think all the efforts and plans by Donald Trump and the US to build up reserves of crypto, where does this leave that? It's never really been viewed as a safe store of value across board. In many climes, it is seen as a very speculative asset to investing, but we'll be sort of peeling back the layers about all this in light of some of the sell-offs we're seeing in the gold and silver market and different asset classes around the world. Well, that's it for my top picks for now from around the world. Let's now take you to some of our top stories from around the world. We start with gold and silver. Prices declined again in the latest sessions during the week as a broad sell-off in the precious metals gathered pace amid shifting investor sentiment and stronger risk appetite in global markets. Investors moved funds away from traditional safe havens like gold, responding to firmer currencies and changing interest rate expectations. Many analysts say the pullback follows a strong run in precious metals, driven by equity volatility and geopolitical risk, with profit taking now adding downward pressure. Donald Trump is set to launch Project Vault, a $12 billion strategic stockpile of critical minerals aimed at reducing reliance on Chinese rare earths and key materials. The initiative includes $1.67 billion in private investment and a $10 billion loan from the U.S. Export-Import Bank. That's according to Bloomberg. Project Vault targets minerals vital to advanced manufacturing, including cobalt, copper, graphite, nickel, and silicon, to secure supply during market or geopolitical shocks. A new AI automation tool from Anthropic PBC triggered a $285 billion sell-off across software, financial services, and asset management stocks as investors rushed to cut exposure. A Goldman Sachs basket of US software stocks fell 6%, its sharpest drop since April's tariff-driven sell-off, while financial services stocks slid nearly 7%. The Nasdaq 100 briefly fell as much as 2.4%. Before paring losses. Ethiopia, as I mentioned at the top of the show, is set to return to double-digit economic growth this fiscal year as IMF-backed reforms ease foreign exchange pressures and boost exports. The government revised its GDP growth forecast up to 10.2% for the year through to July, marking the first expansion above 10% since 2016 to 17, following currency reforms and improved export performance. Ghana's consumer inflation slowed for the 13th consecutive month to 3.8% year-on-year in January from 5.4% in December, signaling price stability in the cocoa-producing West African nation. That's according to the Ghana Statistics Service on Wednesday. The drop of 1.6 percentage points was driven by a decline in food inflation, which fell to 3.9%. Alassane Idrisu is a government statistician, and he said this in a news conference. It is the lowest inflation rate recorded since Ghana's consumer price index was rebased in 2021. French oil major TotalEnergies has acquired a 42.5% operated interest in Namibia's PEL 104 exploration license, expanding its portfolio north of the Mopane mega discovery and the future Venus development. The move aims to strengthen the company's position as it seeks to become Namibia's first oil producer by the end of the decade. The license, purchased from Marivilla Oil and Gas and 8 offshore investments holdings, lies near the port of Luderitz and complements TotalEnergies' existing stakes in the region, including a 40% operating interest in Mopane. Still on oil and gas, Nigeria is in talks with a Chinese firm to potentially run its refineries after spending billions of dollars to revamp plants that broke down decades ago and still aren't operating. NNPC CEO Bayo Julari on Wednesday said he'd come straight from a meeting with a potential Chinese investor and wouldn't identify the company, but offered the assurance that it operates one of the biggest petrochemical plants in the world. The firm was scheduled to inspect an NNPC refinery on Thursday. Nigeria's Treasury bills market saw a surge in demand at its latest auction, with subscriptions reaching 4.59 trillion naira, nearly 3 times the amount on offer. At the primary market auction on February 4, the Debt Management Office DMO offered 1.15 trillion naira but allotted 952.6 billion naira across 91-day, 182-day, and 364-day tenors, moderating borrowing despite strong investor appetite. President Bola Ahmed Tinubu of Nigeria on Thursday launched Nigeria's National Halal Economy Strategy, a policy initiative aimed at positioning the country to tap into the $7.7 trillion global halal market and accelerate economic diversification. According to a statement from the presidency, Tinubu, represented by Vice President Kashim Shettima, unveiled the initiative at the presidential villa. The policy is expected to add an estimated $1.5 billion to Nigeria's GDP by 2027, according to projections shared by the presidency. And now to Dubai-Nigeria relations. The consumer electronics maker Masar Group of Dubai has announced plans to invest 1.6 billion naira in Nigeria, Ghana, and Kenya over the next 2 years. According to a report by Bloomberg, the large-scale investment is targeted at building data centers and farms. The company said the investment is aimed at addressing Africa's growing food security challenges and widening digital infrastructure gap as demand for data capacity and agricultural output continues to surge.